I think, financials, obviously, maybe you could have a different set of companies who may be in a position to lead within financials. I do see financials participating selectively. Now, some of the changes around, let's say, growth and credit quality, particularly on, let's say, unsecured lending or retail, where people were not so cautious or more aggressive, I think those things can get a reset. So you may have a different set of leaders this time around within financials, but I do expect pockets of financials where the companies really come out stronger of this episode, to be an important driver of rally. And other than that, you also had areas like consumers, which hasn't really corrected much. So difficult for them to participate as and when the rally comes. There could be other sectors which we like, for instance, oil and gas or pharmaceuticals, where we see outperformance, let's say over the next 1 year when this situation improves.
Okay. Last few questions, Saion. One on the back of, we spoke about the foreign investors in the beginning, but at a time when your own house is on fire, you really don't look outwards. So from that perspective, for a foreign institutional investor, now the focus shifts to the mother market. Do you feel that therefore in emerging markets, and especially India, should probably forget about seeing any meaningful flows till you actually see some growth that you can put on the table as proof?
Yeah, no, I think at this point, as we see the situation today, I think what you're saying is right? I mean, it becomes very difficult to be bullish on flows given the kind of outflows and the quantum of outflows that we had seen just like till last week, right? But having said that, like if you think about the fact that, there is going to be a lot of monetary push and liquidity available. And if situation improves, given the fact that there are certain things which are positive for India, for instance, the fall in oil prices, right, which is a macro positive for India. I think if the growth doesn't falter materially. I mean, I know this year is a difficult year, but just looking forward to, let's say, calendar year 21, and if we see resilience there, if we see growth coming back, I won't be surprised if India starts to get its share of foreign inflows. I won't kind of rule it out if I take a slightly longer term view. The fact is lower oil prices and whatever, disruptions which are likely to happen in supply chain can benefit India, right? For instance, we are looking at manufacturing coming to India. That's what we thought would be one of the drivers of growth for India, which I think is stalled at this point. But all this thing can come back from a longer term perspective. So yes, near term expectations are lower, but things can change, let's say 6 months or 12 months down the line when the situation improves.
And then will India be one of the best markets that you could find if things get into place? Just one final question. How was India placed once we get the resolution?
Yeah, I mean, see, at this point, obviously, from a regional perspective, our regional strategist is neutral on India. He is more overweight on North Asia, like Korea and China. But I guess given the correction in the markets, right, it has come to a zone where, the valuations have become very attractive. See, what has happened is at the margin, there were some issues in India. Those got aggravated because of this COVID situation. So I think at this point we have a neutralish view. But if the impact of this COVID is not deep enough, and we are able to come out of it, I think on a relative basis, given the correction in valuation, it may start making sense for India sometime down the line. But at this point, from a regional perspective, we like other markets more than India.